Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Once again, we thank you for joining us in this edition of the Market Carver. We got three topics for you today. We're going to talk about some economic data in the first 2 points. We'll hit retail sales, and then we'll look at inflation, a topic that just stays with us. And then we'll wrap up with a look at small caps. So we'll start off with retail sales. So I'll begin this by saying we walked into this year with maybe the most widely anticipated recession in history. That is by far the consensus take coming into the year from banks and investors all alike. And it seems to be an economy that's just not ready to roll over and die just yet. We talked last week about a very strong labor market. That is helping keep an underpinning of strength. Then we had 8.7% increases in Social Security that begin to roll through. That is now a small amount that helps support. And we, of course, have a growing number of those in this country rolling on to Social Security. Right? So that's a decent amount of income. Those things, I think, are combining for what we saw in retail sales, which was really a gangbuster. Andrew actually provided us a chart which looks at this from a monthly basis rather than what we're looking at here from the Wall Street Journal. But in both cases, what you see is a January, which recorded a big, strong boom in the economy. See, we're just looking at just a few short months. If you zoom out, you'll see just how much this January stands out. It's not uncommon that you see us start the year off strong, but even more so this year, led by dining out, including spending at bars, autos and parts, all these things, strong gains. Just another indication that, again, the economy not yet ready to roll over. This presents a problem for the Federal Reserve. So coming into the year with that base expectation that investors were looking for the recession to just be a matter of when, not if, that creates a problem for a Federal Reserve, because the market also began to think that they would stop very soon their series of rate hikes and begin to cut. This strong data just takes that essentially off the table. In the last couple of weeks, we've seen a very strong move by the market to begin to take just how far we're going to go with rate hikes seriously. So saw some trends reemerge in the bond market for rates going higher, and just creates a whole lot of complications for the Fed, not yet seeing the weak data. And this strong retail sales, of course, feeds into the inflation, which is our next point here. Again, it's all about expectation, and the consensus continues to be for inflation to fall. So, that's really, we saw a strong start to the year, and so much of it was this idea that inflation would precipitously fall and give cover to the Fed to do that. And so strong retail sales and the actual reported data just not dying as much. But here you can see this is a chart of the expectations, and it's just for it to collapse. So the stakes are high, Andrew, for this data to meet these expectations of such a decline, which may be a tall order.
It is. And I think one of the big takeaways from this that I think a lot of people could resonate with, in a message that we constantly are talking with our advisors and with the families that we work with, is when we look at the economic data, but then we say what we're really focused on is the market. And the two are not always the same. Rarely, actually, are they ever saying the same story. And I think this is a great example of that, to where, as you said, we've had some strong labor market data. Here's retail sales showing consumers still are out spending. And traditionally, those are signs of a positive, strong economy. And yet, as we record this on Tuesday, we're seeing the market pull back. And why would the market respond that way? And it's because they're two different things. There's market data that's not been as encouraging in the short term recently, and that's what the market's keying off of, as well as now the expectation that maybe the Fed isn't done hiking interest rates as they did throughout last year. And so we always want to separate. We want to watch both economic and market data, but we want to separate them into two different groups when evaluating portfolios and holdings and the amount of risk we're taking. They are two different things, as they often tell two different stories. With that, the third point we had to share with you today is looking at the different asset sizes. So we have small cap, mid cap, large cap companies, and they often trend in the same direction, but they don't always show the same level of strength. So recently, we've started seeing large cap. I think S&P 500 has begun to weaken a little bit. It's negative for February after having a strong January. Meanwhile, we're seeing mid and small cap stocks actually have held up fairly well. And so the chart we wanted to share with you this week for this is looking at the number of stocks hitting new 6-month highs based off the size of the company, based off the market caps. And so what we can see, and I know there's kind of a lot going on in this chart, I apologize, but if we look at the percent of small caps hitting 6-month highs, it's much, much higher here recently as the percent hitting new highs for large caps. We're seeing a little bit more strength on the internals, on the individual stock level, for those smaller capitalized stocks than we are for some of the mega caps. And that was a thing we saw coming into this year. Something we continue to think still has viability is looking outside of just those mega cap stocks, the Facebooks, Amazons, Microsoft, Facebooks, things like that. And there are, we think, other opportunities and maybe some of the smaller, maybe less discussed or talked about stocks that maybe still are showing some strength right now. And so we positioned some of the portfolios to kind of have that little bit of a tilt. And so if we do see the market continue to strengthen, maybe it does improve with these good economic data points and the market does begin to respond to that, then we think that we should see some strength continue, as has been the case in some of the smaller and mid-cap parts of the market. Maybe that changes and we need to shift our sales, but for this year, we are continuing to look for maybe that kind of shift from the mega caps to some of those smaller cap stocks.
Yeah, and while there's certainly a lot of pain to be felt when large caps are weak and falling, just because it's so much of the investable dollars. But we look forward. There's so much optimism if you can have small and mid-size, just because there's so many of them in number. So many of the market cap is in the big companies, but many companies are of the smaller variety. So we look forward to that being the case. We don't know if it'll continue, but sure would love to see that. So with that, we do thank you all for your time, spending a few minutes with us this week. Don't forget, as always, give us a call if you think we may be of service, 800-928-4001, or you can scan the QR code and queue up that electronically. So thanks again and have a great weekend.